We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Egon von Greyerz, founder and managing partner for Matterhorn Asset Management. How are you today, Egon?
I'm fine, thanks. Good to be with you, Tom. Look forward to our discussion.
Great to have you back. Of course, I feel like I say this every time. It's been a little while since we've chatted, but there's so much to talk about here. And, you recently wrote an article where, among other things, you detail the debt problem that the U.S. is in now. So how many times has the U.S. debt ceiling been raised? And what are some of the numbers associated with the size of the outstanding debt and interest expenses on that debt?
Well, Tom, that debt ceiling is a farce, of course. There's a big political upheaval and Congress and discussions, etc., and a big show every time they reach the limit. But, they reached the limit over 100 times since 1917 when it was introduced, and it's always been increased. So, what's it there for? Just for the show, because we know they always do a bit of political posturing and then they increase it. And that's why, the US was slowly and now quickly on the way to perdition. That debt is going to now grow exponentially in coming years because of the problems in the world and the US problems. Of course, the cost of this debt, which was started with nothing, basically, been over 100 years ago, now is 32 trillion. The annualized cost of financing it is today over $1 trillion. $1 trillion. If you just take I've looked at that debt for years and years, and I've seen, just you take since Reagan 1980, it was about 1 trillion, he more than doubled. He almost trebled, 2.5 times, I think 2.7 times. He increased the debt. That's why everybody loved Reagan. Nobody thought about the fact that they loved him because he pumped a lot of money into the economy and to the stock market, which went up. But since Reagan, on average, U.S. Federal debt has doubled every 8 years, without fail. Now, when Trump took over, the debt was from Obama. The debt was 20 trillion. And I forecast that 8 years later, whether it will be Trump or somebody else, it's Biden now, his second 4 years, 8 years, that it would be 40 trillion. Nobody believed it at the time, and because it's 20 trillion when I said that, and now it is 32, as I said. Will we get up to 40 trillion by beginning of 25? I don't know. But, it probably will, because I think debt is now going to go up very fast. But then let's say we get to 40 trillion, or, it could be a little bit under. I think it could be even over, because I think things will happen which will make it just run away, this debt. But let's say it's 40 trillion, and let's say interest rates are as low as 4%, which I don't think they will be. I think the Fed will lose control of interest rates. I think the market will determine interest rates. I think U.S. bonds will only have, or treasuries will only have one buyer, which will be the Fed. And therefore, the bond prices will go down and the bond rates will go up dramatically. So I think 5 is probably conservative, but 5% of 48 trillion is 2 trillion. 2 trillion will be almost 50% of the budget revenue today. And of course, if things turn out as badly as I think they could, budget revenue will decline. So it could be more than 50% of tax revenue. So, we're not going to stop at 40 trillion either. It will continue. So sadly, the US is looking at a pretty dire situation, a situation which cannot be financed in normal terms, only by the Fed buying the bonds, because the foreign governments have stopped buying bonds. Investors, who the hell wants to buy a bond from a country which is technically bankrupt today, and that has increased debt by 30 times since 1980, more than 30 times, and has increased tax revenue by I think 7 or 8 times. How they can never be repaid? Of course, they're just increasing the debt and never raising enough tax to repay it. Of course, they never no intention of repaying it either. The only way that now they can deal with this is to inflate it away, and that's going to happen. Of course, we're going to see massive inflation in coming years in the US, and which will mean a debasement of the currency and the dollar, and obviously gold will reflect that, because the gold is the other side of the dollar or any currency. So we're looking at some very interesting but some very difficult times ahead, Tom.
Yeah, Egon, it's interesting to think about that doubling of the debt every 8 years. That really lends itself to the exponential nature that you're talking about. And if you could walk us through the swimming pool or the stadium swimming pool analogy, as that stadium fills up.
Yeah, so I've used that a couple of times or a few times in articles. I think it's a very interesting. It's how how exponential moves take place, really. So you take the example of you fill a stadium, for example, could be anything. You start with one drop, and then you double it to 2, you double it to 4, 8, etc. And then you ask, after how long will it take to fill the stadium? People will think it's months or whatever. No, it's actually 50 minutes to fill a stadium. And it doesn't really matter how big it is, because the variation, the difference in time is so small. So, but then you wonder, how far has it gone? How full is it in 45 minutes? 5 minutes before it will be full. And people will think, well, it's probably 60, 70, 80%, something like that. No, it's only 7% full after 45 minutes. So in the last 5 minutes, it goes from 7% to 100% full. And that's how exponential moves take place. I mean, that's, for example, how you look at hyperinflation in the Weimar Republic. You see how it moved up gradually between 1920, 21, 22. And then in 1923, it just went from virtually nothing up to millions of percent, basically. And that's the same way that this debt will move also. So we see it slowly now, but as everything goes wrong and everything defaults and the bonds go down to zero, and banks start to fail, and derivatives now has to be also bought by the Fed, because they're also defaulting and they're trying to save the banks. That's how, for example, talking about global debt, but you just take the U.S. debt of total debt of 32 federal debt and 94 trillion total debt U.S. How that can easily grow to quadrillions if you add the derivatives, and the derivatives are a lot higher, in my view, than what global derivatives than what the Bank of International Settlement in Basel, BIS, what they show. I mean, they show 600-700 trillion, but that actually was halved a bit over 10 years ago, because they just took out one side of the risk, which is incorrect. So the real amount was, so said, this is really 1.2 quadrillion. That was over 10 years ago, and now it's probably 2 quadrillion. A lot of shadow banking derivatives that are not being recorded properly. So that is that's a gross risk we're looking at. And remember, people say, well, you net it off and it's much less. The real risk is much less. That's not the case, because when counterparty fails, gross risk remains gross. When the other side doesn't pay, it remains gross. And I think that's what we will be seeing in coming years. Yes, of course, they are going to try to issue central bank digital currencies, which everybody's working on. If they have the time to do it before this happens, I'm not sure. But even if they did, that's just it's just playing with the figures. It will still be a fiat money or a currency, and the outcome will be exactly the same, or it might be delayed by 6 months or a year, the inevitable. But nevertheless, it's not going to solve the problem. So, and I think we are going into this exponential phase now. And I think, if the issues of dollars and US debt is as great as I believe it can be, then of course we will have not just high inflation, but probably at the final stage is hyperinflation also. Mm-hmm. Interesting prospects are awaiting us.
Interesting seems like a choice word to use in that case. But I wanted to ask you a little bit more about, you were saying the central banks buying their own treasuries, being basically the only buyer of their own debt. Does this lead to yield curve control in the meantime? And what does that do to the value of those bonds?
Well, I think yield curve control will fail because, when debt goes up exponentially and most debt becomes bad debt, because I said nobody wants to hold US debt, of course, so it's only the Fed that will be the buyer. But then you have whatever bank debt that's left is going to deteriorate very rapidly, and therefore the cost of that debt will increase also dramatically. Private bonds, if you exclude government bonds, will also go down in value because most people will not or be able to repay them. So you will have lots of bond defaults, and therefore rates, especially long-term rates, will go up whether the Fed likes it or not. And they're not going to be able to stop that, in my view. And the long rates will pull the short rates up. So I don't believe that there will be yield control at all. Yield curve control. I think that the market will determine the rates now, and that's why you look at long-term interest rates. We know that they peaked in 1980, and they bottomed more or less in 2021. That's a 40-year decline of rates, and now. That trend has reversed, and sure, it never moves in a straight line, and there'll be times when they're trying to, and maybe succeed for a very short time, to manipulate the rate down. But long term, the trend is up, and that fits in with the inflationary scenario and the money printing scenario also. So that's, I think, what we're going to see.
You mentioned counterparty risk as well, Egon, and we've recently seen that with the headline interest rate in the US at 5.25%, some of the first damage from that, very steep rate hiking cycle has been some of the regional banks failing. So how does that counterparty risk start to spread within the banking system? And if you could also walk us through how that ended up affecting Credit Suisse and what's important to understand about that. Well,
I worried about the banking system for quite a while. We because of the risks we saw in the world, 25 years ago, we were planning for ourselves and the people we advised to, how to protect that risk, and that was already in the late 90s. And that's why we came to the conclusion that the only way you can protect a risk of that magnitude, when you talk about the whole financial system and not just the US, But the global system, you cannot protect it with in the same way as the risk has arisen. So you can't buy futures or derivatives or instruments within the financial system to protect against the financial system. It has to be outside, and it has to be real assets. And that's why we decided at the beginning of the 2000s that the gold, physical gold, would be the best way to protect this risk. And that's why we did that for ourselves and the people we were advising. And we went in a bigger way in 2002. And then later on, people were asking us to help them. So we opened it up. So we were helping other people also to, obviously to acquire gold and store in their own name and control and to store it in the safest vaults in the world. So that was a pretty simple solution for us, and we haven't changed our mind since then. The gold has gone from $300 in dollar terms and up more in some other currencies to 2,000 now. But that's just the beginning, and the fact that it peaked in 2011 and then had a correction for a few years didn't change anything. The wonderful thing about, if you take protection in the form of a physical asset, gold, that's the only money that's survived in history. If you do that, you don't have to worry about gold going down more than temporarily. The trend in gold has been up measured in paper money or fiat money. It's been up for 5,000 years. So it's very simple. That governments and central banks will always be supporting your gold by destroying the value of the fiat money of the nation. And now that is going to accelerate. We've been into gold for almost 25 years now, and I don't think the move has started yet. But we're not gold bugs at all. We're just looking at protecting a risk of finding gold as the best asset. So that's really what we're looking at here. And it's coming back to the banks. So we've seen 4 U.S. banks going under very quickly. 4 banks that were obviously, like most banks, badly managed by opportunistic governance, I'm going to say, leadership, and that misinvested the assets and because of greed bought long bonds that yielded a fraction more, and then of course when people wanted to pull their deposits out because they started to worry, that then they had to sell those bonds and value them at market. And this is what the thing that we will see in the whole banking system, including the derivatives. A lot of instruments are valued at maturity, and they shouldn't be valued at maturity. They should be valued at market. And that's why we have massive latent losses in the banking system. And half of the US banks are basically underwater now, today. And it's going to get a lot worse because a lot of their outstanding assets, they're not going to be repaid in full because they're going to go down in value. So therefore, we've just seen the beginning of the fall of the financial system. So we've seen 4 U.S. banks and Credit Suisse here in Switzerland, of course, which I've been writing about for years. There was a disaster waiting to happen always. They lost billions here and billions there, and one deal after the other. And the bank that took them over, UBS, was virtually going under in the 2008 crisis. So I won't say it's a blind, leading the blind here, but it's in my country, Switzerland. I love Switzerland, and it's used to have the most conservative banking system in the world. But just you take Credit Suisse and one with a marriage with First Boston, which happened many years ago. That turned it into an American bank, and the whole Swiss system has also turned into American poker system or casino, where you are taking risks that are incalculable, and sadly, so the whole banking system, even in Switzerland, is badly managed and high risk. Now, I don't. When it comes to politics and the economy, I think Switzerland is the best in the world. So I'm not talking down my own country totally. I mean, I'm Swedish and Swiss. So, but I think Switzerland is one of the best countries in the world. But as I said, the banking system is as bad as any other banking system. The political system is probably the best in the world, but the banking system is no better than other banking systems. So I wouldn't keep any money in Swiss banks either. Yes, the Swiss franc has been stronger than most currencies because the borrowing, government borrowing, and deficits are very low in Switzerland. They're managing the economy very well in Switzerland. Much better than the bankers are managing the banks, because the Swiss politicians and governments are not as greedy as the Swiss bankers have become, because the Swiss bankers have become international. The government is fortunately still Swiss. So therefore, it's a well-managed country. When I started working in Switzerland in 69 in a bank, the Swiss franc to the dollar was 4.30. $1 bought 4 Swiss francs 30. Today, $1 buys 90 cents Swiss cents. So that's well over an 80% decline of the dollar. This mighty dollar has gone down 80% against the Swiss franc. So when I'm saying that the Swiss banking system is unsafe as any other banking system, the Swiss economy is one of the best in the world still. They will suffer like all other economies, but so we've got to make a difference between politics and government finances and the banking system. But the risk is everywhere in the banking system. We have U.S. banks, a Swiss bank, and that contagion will just, as I said before, there's so many banks underwater, and that will just continue. And then the problem you have now is that there's a credit squeeze on. Bankers have to cut down on lending, and the industry can't take that. They can't afford to repay, and cutting down on lending also means higher rates. Can't afford the higher rates either. So it becomes a vicious circle, and then debtors are not going to be able to pay their loans. And this is, gradually we'll see this vicious circle developing into many more bank failures. FDIC, it's nothing, but they have is pocket money. So they're not going to be able to save the system. So again, it will have to be the government, and the government through the Fed are the ones who's got to buy up all this debt and then finance all of these horrible events that will take place in the financial system. Obviously, I sound like a man of gloom and doom, but from my point of view, I'm an optimist as a person. It doesn't sound like it, I know. People tell me, but one of the things I've always done in life is to understand risk and understand the downside and do my best to protect against it. So that's what it's all about. At least if you understand that there is a major downside risk and you take protection, you have a better chance of surviving what's coming next than many people who are as optimistic as ever, and I just have a totally blinkered system when it comes to understanding the risk around them. Mm-hmm. So that's my concern, and my concern is that most people have not realized what's going to happen.
Well, Egon, we've seen the bailout of those banks. What do you think the risk of bail-ins are, where they end up basically seizing the customer deposits to help back the bank?
Yeah, it's a very interesting question, Tom, because after 2008 or 6-9 crisis, everybody's talking about, then we saw bailouts of every bank everywhere. And then everybody said, well, we are not going to have any more bailouts. It will be bail-ins in the future. So lo and behold, 4 banks went under in the US and Credit Suisse in Switzerland, and there were bailouts. No bail-ins at all, except for bondholders in Switzerland that actually were bailed in, but not in the US. And I think still, once this starts to accelerate, in the exponential way that we just talked about in this stadium, they are not going to just print money for everything. I'm quite certain that depositors in banks, and especially U.S. banks, but also European banks, they will actually be. I think they're not going to take their money, but they will tell the depositors that here, well, we've got an offer you can't refuse. You're going to buy U.S. treasuries. We're going to give you a few trillion or more treasuries, and you have to hold that because that'll be great investment for you because we're going to repay that in 20 years or whatever. And in the meantime, you get a good rate of interest on that. And of course, the U.S. government never defaults. So this is a good, safe investment for you. The fact that the money will go to zero and be worthless, and that the government is never going to repay it, just extend it. Depositors don't have a chance, and no saying that. So I think there's a high risk that they will be forcing depositors to own a lot of the U.S. debt. That'd be very interesting to watch, and people will, of course, they'll spin a story of the government where it looks fantastic. This is you're saving America here now. And you're holding a very safe investment for a country that's never gone bankrupt. Well, sadly, they will realize at some point, if not themselves, the deposit of their children, that money was not worth anything at all. Mm-hmm. And I think yes, so bail-ins are certainly. I can see that they will do that, whatever they say now, because it becomes so big that they have to do it, and so they'll basically make the people suffer also with them.
Egon, is there we always talk about the U.S. and much of these conversations are very U.S. centric. Is the banking system or the financial system in Europe in any better of a position, or could it be even worse? Is this really in a way, the downfall of the West as a whole?
Yes, absolutely. It's no better in Europe at all, the system. It's even worse because you haven't got a central bank that can coordinate this. Not that, I'm not a great believer in central banks at all. I think central banks should be abolished, and Fed being the first one to be abolished. The whole system would have worked so much more efficiently by just the natural forces of supply and demand, and the laws of nature are always better than governments interfering. And this is why, coming back to gold for a second, gold is nature's money. It's the only money that's ever survived, and that's because it is nature's money. Anything that mankind has tried to manufacture or print or whatever form has always failed, and nature's money has always survived. And therefore, if the natural laws of supply and demand determined economic cycles rather than central banks interfering and making the peak so much higher and the bottom so much deeper, then I think we would have had a much better system. But sadly, we have what we have, and that's going to turn out badly. So yeah, central banks should be abolished totally. But what I was saying was that the ECB in Europe has got very little power to coordinate any kind of rescue attempt, and the European banking system is in just the same bad shape as the American one. And you just take property loans in Europe, for example, they're looking very, very bad. And the banks also have most of them on their books. They haven't sold them on. So we're going to see the same in Europe, and we're not going to see a central banks. Not that they can save anything; they can just print money. But nevertheless, we're not going to see any. They're not even going to agree in Europe how to go about this. So yes, this is especially a Western disease, and it's of course the whole global economy is going to suffer, but it's the West which is the most indebted, which will suffer the most. So the Western banking system and the European one is going to have a very bad time. And of course, all of this has been exacerbated by the sanctions also, which I always said that are ludicrous. The sanctioning of Russia and of trade with Russia, and therefore of especially European trade, is a disaster. Europe just follow whatever instructions came from U.S. politicians, and if you take the Romans who acquired, over 2,000 years ago, who conquered major parts of Europe, Northern Africa, Asia, etc. They always let all these countries continue with free trade. That's how, during the Roman Empire, business and commerce and trade prospered. And that's an obvious thing to do. Now, what we've done here, and what the US has done in America or in Europe, is just followed, without any protests at all. You take Germany, that suffering dramatically because of these sanctions, that as they were totally dependent on Russian energy. Therefore, the shutting down trade is extremely bad for the world, and especially for Europe. So that again affects the banking system and makes the whole banking system in Europe very fragile. And so yes, we will see the same problems here in Europe, and it will lead to defaults here also, and it will lead to higher interest rates, and it will lead to higher inflation in Europe too.
Egon, what do you see as the next likely shoe to drop in the financial system in the West? Is it more bank failures and bank runs? Is it a market panic moment, or could it be a liquidity issue associated with the debt ceiling resolution?
No, but we'll start with the last one. The debt ceiling. The debt ceiling is, that's going to be always has been resolved. As I said, more than 100 times. So I don't think there'll be an exception here either. There'll be the same, spectacle and playing out, and then everybody they'll settle. So that I don't see, I don't see a default coming out of that. But what we will have is more of the same. When you have risks coming at you at incredible speeds from all directions, it doesn't really matter what the catalyst is, because we know they're all out there. It could be another bank failing, it could be a bank run. And what we learned now, of course, is in the case of especially the California banks that went under, the internet made these bank runs instantaneous. With your account on your telephone, just transfer the money out within seconds. You don't have to queue outside the bank anymore. It's wonderful. You just pick up your iPhone and you take your money out. So it can happen so quickly without anyone having a chance to stop it. That's obviously why they love to implement a digital money system, a central bank digital money system, so they can just turn off the electricity or turn off the accounts. But until then, and that's not going to solve anything anyway. Until then, yes, it could happen very quickly, and the next bank could be around the corner. So it could be a bank. It could also be the obviously the dollar weakening, and it can be the bond market also continuing down and interest rates up because of everybody sees the prospect now of the US not being able to finance itself at all, and that will be a liquidity problem. That yes, the Fed has a solution, but that solution is not solving anything. It's just a method that leads to a decline and a failure of the financial system anyway, and as I just outlined, a collapse of the bond market, of the treasury market.
So, to kind of contrast what we've been talking about in the West, how does this position the East financially? You know, many of our listeners know that last year was a record year for central banks buying gold, but what do you see as their goal in doing so? Is this to facilitate trade between them in something other than the dollar?
Yes, it's so interesting, you know, that you see the headlines everywhere that central banks are buying gold. Well, yes, they are, but not in the West. You don't see you don't see the Fed buying or the American government buying gold. You don't see any European government buying gold. It's only Eastern central banks are buying. It's China, it's Russia, it's a lot of Asian countries, Middle East, etc. They're the ones buying because they see what's happening. They're selling the U.S. treasuries. And they're buying gold. You know that both China and Russia are declaring about 2,000 tons each of central bank gold. The US said to hold 8,000 tons, which few of us believe. We think it's been lent out, most of it. But China and Russia probably has a lot more gold than they're saying. They have secretly or without declaring it, just kept a lot of their own gold production. Remember that they are China is number one in the world now, and Russia is number two in gold production, and therefore they don't sell their gold outside the country. So over the years, they probably have their estimates that certainly China has not 2,000 but 20,000 tons, and Russia could have some maybe not as high but not far away. So they're building a power situation. They see what's happening, and so do a lot of Asian countries. And the reason they're doing this is that they see gold becoming a major part of the next reserve currency. The dollar is gradually losing its reserve currency status as more and more countries are now talking about doing trade, and especially commodity countries with China trading in the commodity against yuan, and then the beautiful thing is that the people who sell in yuan, like say Middle East, Saudi Arabia, or even Russia to China, the yuan is freely exchangeable on the Shanghai Gold Exchange to gold. There are no restrictions there, so they don't have to sit on their yuan. They can have gold, and they'll keep increasing the reserves in gold, and then whenever they need the gold to trade, they'll sell the gold for yuan or whatever. So that's where and since we know that the whole of this sector, as the West is declining, which is inevitable, every empire has declined throughout history, and so we're going to see the last desperate moves now of the Western economy as it declines until there's not well, it won't disappear. Nothing disappears, but it just have less importance for the world, as I said in a recent presentation in Frankfurt. And maybe not this generation, but your children or grandchildren. You'll send your children to China as au pairs. We'll have Europe will be the poor country, and China will be the rich country. Sure, there's always a risk of political upheaval or revolutions in countries, etc. But barring that, the whole of the power center is moving to the countries that are actually either have the factory of the world or the production of the world, which is China, or the commodities of the world, which is Russia, biggest commodity or natural resource reserves in the world with $85 trillion. I think Russia is going to be a major power in the long run. They need to restructure the political system and improve in a lot of areas. But in the long run, that natural resource reserve is going to be make Russia very important as an economy. And then you have the whole of the South America, again, commodity based, and the Middle East. And we, as commodities are at an all-time low against all paper assets, that is going to turn also. So commodities will be where the strength will lie when and countries with commodities will be the strong ones. So we will, and as you've seen, more and more countries want to join the BRICS, for example. And then you have the Shanghai SCO, the Shanghai Cooperation Organization, which controls a major part of Asia as a trading organization. And this is where the power will move from the west to the south and to the east. And these shifts have always taken place in history. This is nothing new, and we will see. Our generation, or mine, and we'll see the beginning of that. Shifts never happen overnight, but gradually we're going to see that take place. Fascinating, but that's just part of history. If you study history, you know that always happens, and we can see with the debts and the decadence and the hysteria of the West that we are getting to an end of this of the Western system. They're not going to give up easily, and sadly, you take the U.S. The U.S. might, like all dying economies and empires, they're going to maybe start more wars in order to be able to print more money and to delay the inevitable. That's possible that this war will escalate that we're seeing Ukraine, which is really a war against U.S. and U.S. against Russia more than Ukraine, which is a pawn in this game. But nevertheless. So we might see wars. We will. It's not going to end just smoothly. The Western Empire, and it will do, and it's only a matter of time. And whatever events we will see before the transition takes place properly. But nevertheless, it's inevitable, and we are already seeing the power shifting, as I said, to these countries in southern and eastern countries. Very interesting, the transition itself will be, there'll be some horrible times especially for the West, for America, for Europe, etc., for the people there. A lot of people will suffer because, as I said, that there will be a lot of upheaval and a lot of economic misery, sadly.
Mm-hmm. Egon, it's interesting to try and think about China and Russia being such big gold producers and keeping all the gold that they're producing. It's been speculated that China, for example, has something like 38,000 tons. I don't know what kind of credibility we can lend to that number, but if we just do, let's say, use it as an example, would them coming out and declaring that they have that amount of gold devalue the rest of the gold in existence, or is that gold almost in some ways accounted for by the overall supply?
No, I don't think it's accounted for at all, because these they've been hiding it for a very long time, and no one expects them to have bigger amounts of gold, and at some point, they probably will declare it. I mentioned in my latest article that gold could become the reserve currency of the world, replacing the dollar. Actually, Grant Williams is doing an interview on that subject in one of his latest podcasts, which is with Luke Groman. Luke Groman raised this topic, and I think it's very possible that as the dollar, the importance of the dollar declines because number one, people are going away from the petrodollar and they're trading, especially in commodities. And number two, also the central banks are not willing to hold dollars anymore or treasuries because we see what happens. Whatever country the US doesn't like, they just freeze the money and steal it, basically. And who the hell wants to hold currency that can be confiscated by the US in this case? So therefore, I think we will. And there's no currency to replace the dollar as a reserve currency. And therefore, gold is totally natural for this. And especially as we said, probably countries like China and Russia and also obviously other Asian countries, India, Vietnam, Thailand, and all of these, they hold a lot of gold. And therefore, it would be, and the Middle East also, it would be totally natural to have the gold as the reserve asset, a floating reserve asset of the financial system, replacing a dollar, which cannot have that role anymore. But that could not be gold at $2,000. It would have to be gold at $25,000 or $50,000 to actually play a significant role against the amount of debt outstanding. So we could see just a natural revaluation. It's not one country controlling it. It's just actually, this is what I'm saying, we're talking about the supply and demand here, and rather than central banks determining values. And so gold would float up to a much higher level because it now becomes a reserve asset and everybody has to hold a significant amount of it. And that could easily take place in the next few years. And it could happen, as Hemingway said, with bankruptcy, and it could happen gradually, but then it could be all of a sudden, it'd be suddenly. So that is a very interesting development, and I think that's really the only way it can go. It doesn't mean that the dollar will die as a trading currency overnight, because there's still a lot of transactions in dollar. It could still be a trading currency, but it won't be a reserve asset. That's the big difference. And so, I mean, that's a fascinating development that we could easily see in the next few years, and it could happen faster than we believe. Gold will go up anyway because, as I said, you take the US financial system, you take the European financial system, they will have to print so much money, so measured in useless money. Gold will obviously go up since what you measure them in is going to go down. So when we never looked at gold as going up, it's always the currencies going down. But if we get this revaluation of gold, then it will go in real terms. It will also go up substantially, not just against falling currencies.
Egon, you mentioned that we could see $25,000, $50,000 gold. Is there a point where it becomes, almost meaningless to measure gold in terms of dollars?
It always is, and I often say that the forecasting, and especially the gold price, is a Mark's game. I've done it in the past. When we started, I say we will at least see. Well, that was 25 years ago. We'll see gold in $10,000 in today's money. I said, because that's otherwise it's meaningless. But so going back to what I said before, it is totally meaningless to measure gold in currency that are being debased by the minute. And therefore, yes, it makes no sense. So you only look at gold as stable purchasing power. Gold protects you against these disasters that we talked about, bank failures and other things of the system, and debasement of currency. So therefore, that's what gold is, and we don't care the slightest bit. The people who invest through us, etc. We don't care at all what level the gold reaches in fiat currencies. But so. If, as I said, if gold only goes up because of the amount of required money printing that we will see in coming years, then that's meaningless. But there will be a point when gold will go up by more than the purchasing power. But that's on the one hand. So that will happen. Whatever. it has to happen because that's the way that a financial system ends, by debt defaults and massive money printing. So, but if gold actually, as I said in the other suggestion, or that gold becomes a reserve currency for central banks, floating reserve currency, not fixed, which is, I think, the way it should be, because whenever it's fixed, it will always be manipulated. This is floating now. If that happens, then gold will be revalued because it has a totally different use and a use it deserves as the only surviving money in history. And then gold will be revalued permanently at a much higher level, which is not in relation to falling paper currencies, but because that gold finally is recognized for what it is, stable money, and really the only money that should be reserve money or reserve currency. So that's why we have to differentiate between gold just going up in worthless paper money, or gold going up in actually becoming a real asset that countries treasure and want to hold, whatever happens, and therefore it will be revalued, the fundamental revaluation of gold, and a lasting one.
Egon, to your point about the exponential nature of debt growth, I recently saw that Argentina is now moving their headline interest rate to 97%. So do you see that as the, kind of the end game for a lot of these Western currencies?
Yeah, well, that's inevitable. As I said, central banks will lose control of interest rates. And if we get to the hyperinflationary stage of this decline of the Western monetary system, then it's inevitable that interest rates will reach those kind of level, which of course becomes meaningless because the paper money is meaningless, and then nobody can pay that interest anyway. And the only way to pay the interest is to print more money. And in the end, you will have to have an implosion of the system. And but when debt implodes, then all the assets that the debts were backing will also implode, and that's the final stage of this debt disaster that we'll see. Things will settle down at a much lower level, and the world will suffer and will start afresh. And that's happened throughout history. It's never happened on a global basis before, and this is why it's so interesting. No one can forecast exactly how it will play out. Mm-hmm. We're making certain assumptions here and painting pictures, but we don't know exactly what will happen, because before, in any hyperinflationary situation, you take Argentina, and Argentina which was one of the strongest economies in the world over 100 years ago, it is now defaulting on a monthly basis, and has hyperinflation after hyperinflation. But these smaller countries, relatively smaller countries, they can be rescued or whatever by the system, or ignored, or written off. And the same with the Weimar Republic. I mean, there was just in Germany really this hyperinflation, and Zimbabwe was there, and Yugoslavia. All of these hyperinflation scenarios are isolated. We never had this globally, and when I say globally, it's going to hit the West worse than the rest of the world, as we outlined. But it's going to be of such magnitude that, yes, of course, it's going to be very difficult to forecast the exact outcome. But we can, as we have been doing now, we can paint a picture. And as we said, part of this inflation, hyperinflation will be very high interest rates for a limited period, because just as we discussed with the stadium filling very quickly the last 5 minutes, that will be the same with the debt implosion, and the hyperinflationary, the end of the hyperinflationary period. That in the end, it will all collapse, and then we start again, because you can't. Hyperinflation never goes on for years and years and years. The final stage, just like with the stadium, is very quick, and then bang. And we will probably come to that at some point in the next few years. I'm not going to forecast exact years because I can't, but nevertheless, it's likely to happen.
Well, Egon, I think that's an unfortunate note to kind of wrap up on. Is there anything else that you'd like to touch on before we finish up here today? Well,
Tom, so I'm painting a picture that most people don't want to hear, because it sounds like, I'm a real pessimist and as a doom and gloom artist. But we've been talking about risk. Risk doesn't mean, that's not the same as looking at your life and your quality of life, etc. If I'm anywhere near right, it will be very tough for everybody. No one can escape what's going to happen. But as I always say, and people will be poor, and some people will be sick. It will be more difficult to get help and hospital care and all of that. Social security will disappear. Probably pensions won't be there. So it will be a very difficult period. And that's when it comes back to, you look at yourself, your family, your friends, people around you. First of all, there are always things in life that are virtually free, almost free. This is friendship, family, books, nature, music, sports, etc. So there are so many things in life. We don't need the iPhone and the computers and the iPad and latest gadgets and etc. We don't need all of that. If we return to actually, being people and being with people rather than just sitting with our iPhones all day long and looking at Twitter or TikTok or whatever, that would raise the happiness in the world dramatically, first of all. And secondly, in these bad times, the most important thing will be to help your small circle of friends and family, because a lot of people will need help, physical help or psychological help or care. And I'm seeing already with people around us, people are starting to suffer, even in the West. It's inevitable, and that's going to escalate dramatically. So that's what life is all about, helping others, being with others, not focusing on stock markets going up or down or what's happening on, as I said, TikTok or WhatsApp or whatever. And if we can go back to some real values in the difficult times we'll see. That, I think, is the most important thing, and what people should think about. Helping others, first of all, that's really the key, in my view. So that's the note I would like to end on.
That sounds good, Egon. As you're talking about risk, it made me think that, as you're saying, helping others and also educating yourself, I think is important in, realistically understanding what we're facing and trying to understand the steps you can take to mitigate some of that damage and avoiding being completely helpless in that situation.
Yeah, absolutely. We have had, at the end of eras like this, is always the same. You focus on the golden calf rather than actually life and people all around you. So that's what life is all about, not the golden calf. And I think from that point of view, what's going to happen next will be good for the world, because we'll get some real values back again, and that's important.
Mm-hmm. Egon, thanks so much for your time today. Of course, your excellent articles are available at goldswitzerland.com and, of course, on Twitter at goldswitzerland as well. Egon, thanks so much for your time today. Really appreciate your explanation of all these difficult topics.
Thanks, Tom. I appreciate talking to you, and also I'm sure we'll talk again, because there's got a long way to go. But anyway, it's fascinating, and trying to navigate through all of this will be very important.
Absolutely. Look forward to our next chat, Egon.
Thank you, Tom. Thank you. Bye-bye.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.